computation of total income, current total income. Uh, we have already checked your knowledge, and now we will be start. Now will be start is now will be start is a computation of the total income, and total income will be discussed in the details, and how will be calculation of total is here is the 12 steps involved in the calculation of the computation of total income. Step 1 is computation the income of an individual under 5 heads of the income on the basis of his residential status. Here is 5 heads of the income is income from salary, income from house property, income from capital gain, income from business and profession, and income from his other sources. And all income is decided on the basis of his he and she residential status. We will be discussing the more when we discuss about the residential status. Okay, now is just I giving to three words for the residential status. One is residence, number two is ordinary residence, and number third is not ordinary residence, and last is NRI, not residence of India. Okay, and step two is income from any other person if include under section 60 to 64 till will include under the respective heads. It may be income from salary and related to heads. And step third, set of the losses if permissible while aggregating the income under the heads of income, the 5 sources if permissible, and set of carry forward in the it is regarding to capital gain. It is we can recover the short term only, and long term losses we can cover only long term. We cannot cover the short term, but short term losses we can cover in the long term. It is regarding of the it is the salary, house property, the loss if any. You have 3 4 houses, and if you have lost any from houses, you can cover the income from house property. Like this here is the this step point third. Now is step fourth is carry forward and set of the losses of past year if permissible from such as income. If we can carry forward of the losses regarding, we can take decision in the capital capital gain. And now is step 5 is the income is computed under step 1 to 4 is known as gross total income from which deduction under section 80C to 80U. I will be more detailed discussion about the section 80C to till 80U, and will be allowed in step 5th. And step 6 is the balance of income after allowing the deduction is known as total income, which will be round off the nearest is 10 rupees. And step 7 compute tax on such total income at the prescribed rates of the tax, that is a special rates and normal slab tax rates. It is the old regime and new regime, new tax slab and old tax slabs. And allow the rebate is 100% of the such as income tax of rupees 12,500, whichever is less. Under the section 87A, in case of residential, individual having total income up to 5 lakh rupees. It is here only till is step 8. Now will be reach in the step 9. Add surcharge wherever is applicable. I have already discussed the regarding of surcharge, and it will be depend which type of surcharge is applicable. We will be add here. And step 10, add health and education says is the 4%. It will be add after the surcharge. And now is step 11, allow relief under section 89 if any. We will be relieved under the section 89, not other section, if applied. And step 12, deduct the TDS, advance tax paid, for the relevant assessment year, and double taxation relief under section 90, 90A or 91. The balance is the net tax payable, which will be rounded of the nearest 10 rupees and must be paid as self-assessment tax before submitting the return of the income. all steps will be discussed here, and what will be how to when we follow the all steps, we will be reach in the total income. And now when you go to the total income, what is the tax slab is it is all tax slabs, and it will be implemented in 2020-23. It is 2,50,000 is nil, 2,50,000 1 to 5 lakh is 5%, 5 lakh 1 to 7 lakh 50,000 10%, 7 lakh 50,000 1 to 10 lakh is 15%, 10 lakh 1 to 12,000 12 lakh 50,000 is 20%, 12 lakh 50,000 1 to 15 lakh rupees is 25 percentage, and above 15 lakh rupees is more than is the 30%. And next tax regime is financial year for 2023 and 24 is 3 lakh rupees is nil, and 3 lakh rupees 1 rupees to 6 lakh rupees is 5%, and 6 lakh rupees to 9 lakh rupees is 10%, and 9 lakh rupees to 12 lakh rupees is 15%, and 12 lakh 1 lakh to 15 lakh rupees to 20%, and 15 lakh above to is the 30%. It is the same here, is the 30% till is 5% is reduced, and only the 20% to 30% is you are taking is the till 15 lakh rupees the 20%, and more than is 20, more than is 50 lakh 30%, and the new slab is same. But if the some small changes, 3 lakh, 2 lakh, and 3 lakh to 1 is 12 lakh to 15,000 is here is the 25,000. New slab is the 20%. Okay, now we will be discuss the deduction allowable for the gross total income. Here we will be discussing the more is section 80C, income tax deduction as per financial year 2023 and assessment year 2024-25. Eligible person is individual, and the maximum deduction available in the financial year 2023 and 2045 here. Section 80C, investment into very common and popular investment options like for a individual person and into HUF, into undivided family, like is a LIC and PPF and Sukanya Samriddhi Dhan Yojana, and mutual fund in the tax saving, and fixed deposit, and like is a RD, and child tuition fees and ULIP, etc. This is the applicable for individual or HUF. Now is section 80CC, investment in pension funds. It is the individual, not for HUF. And section 80CCD, it is the Atal Pension Yojana and National Pension Schemes contribution. It will be applicable on the individual. In 80C to 80CCD till total amount is deduction is 1,50,000 as per old receipts. Okay, and if the some changes here is the section 80CC, 80CCD clause 1B, Atal Pension Yojana National Pension Scheme contribution additional deduction. If you are doing the more than individual, it will be applicable. You can take the maximum benefit is 50,000 rupees. We can say easily section 80C to till 80CCD you can take is 1,50,000 plus 50,000. You can say is that 2 lakh rupees is maximum deduction under this section. Now is section 80D. 80D medical insurance premium, preventive health checkup and medical expenditures, and it will be applied for the individual and HUF up to 50,000 including parents, and 1 lakh rupees for as a in the terms of condition is the one senior citizen, including 5,000 is the towards preventive health checkup in a yearly if in a family person individually, and total is a policy holders. Okay, and now is section 80DD. It will be discussing about here the medical treatment and dependent on with the disability. It will be implement and eligible person is here is the individual or HUF, Hindu undivided family, and individual person is applicable. This is the depend on if a person is a normal disability, at least 40% or more than is 80%. It is or rupees is 75,000 rupees. It will be whichever is lower and is. Several disability is at least is 80% is more is amount is 1,25,000 which is a very high. Now will be in remaining section is section 80E, interest paid on loan taken in higher education. Suppose your child is doing a study, you are taking the higher loan education, you can take the benefits of regarding this loan. And if I am doing the study for further study, if I will be go for in other reputed institutions and out of India, and then I can take this benefits. And he is implemented for the individual person. No limit any other amount of interest paid on education loan up to 8 assessment year. You can pay in the till only 8 assessment year, but you can repayment or closing period with effective. You can suppose for example if you are complete in the 5 years, you can take only 5 years. You cannot take in the 8 years. It is the maximum 8 years. You cannot take more than. Just I am giving you example home loan is a section 80E. You can take is exemption is 20 years and 25 whichever is earlier. But here is the you can take in education loan is only is 8 years. If you are paying before, it will be implemented for only whichever is earlier. And section 80EE. What is the section 80E? Is section 80E interest paid on the housing loan. It is the individual up to 50,000 some two conditions. Some conditions it will be implemented and applicable for loan sections between 1st April 2016 to 31st March in 2017. If you have got any the loan, it will be terms and conditions apply. If you are taking after 2017, no terms and condition apply. And section 80 EEA, interest paid on housing loan. It is individual and up to 1,50,000 subject to some condition applicable for loans sanctioned between 1st April 2019 to 2022. Interest paid on the housing loan, it will be section 80 implement on the, we are doing here discussing regarding of the home loan. Now is section 80G. 80G is the donation to specified funds, institutions like all assessee. For all assessee is eligible like say individual, HUF and company. Who is assessee? Assessee is a person, and who is a person? As per section clause 41 is all individual, HUF and AOI and BOI, artificial persons and etc. And okay. Allow donation in cash up to 2,000 rupees. You can take the donation in the cash of 2,000. If you are doing in the cases of that, you are doing that depend on paying to by check. It depends on the nature of the donation. It will be 50% and it may be 100% is the tax exemption. And is now is the remaining section is section 80GG. Is here is the income tax deduction of HRA. We will be discuss. It is the old regime and new regime. It's the changes. Eligible person is individual. Maximum deduction available on the financial year 2023-24 and assessment year 2024-25 is per month is 5,000 rupees and 25 percentage of adjusted total income. And rent paid is 10% of adjusted total income, and whichever lower. Is 3 points is whichever is lower, you can will be maximum deduction available for your individual person and HUF. And Section 80 TTA, interest earned on saving accounts. Mr. Here is a very important. If you have a saving account and you earn for the interest on saving accounts, it is eligible for individual person, not here talking about the HUF. And it up to it is the TDS is 10,000 rupees is the maximum deduction. If you earning the more than, you will be pay the tax. Section 80 TTB. We have already discussed Section 80 TTA. Now we will be discussing Section 80 TTB, interest income earned on the deposit, saving and FD. Individual person and more than 60 years, both. He is individual, but here we will be considered as a senior citizen if he is the 65 years, 60 years, up to age 50,000 rupees. How many? It is the 50,000 will be taxable. Now is section 80U. 80U will be is the here is section 80U disabled individual. It will be normally we have section 80DD discussed is the, if we are normally disability, it will be implemented the 75,000, and several survive is disability is one like 25,000 is the for the maximum deduction under these deductions. Now I will be discussing the more details, and that is we will be discuss here is that is here is deduction under section 115 BC. Here is the 12 points. I will be more detail all discussions here. First point is this is applicable for the deduction only 115 BC, those person as per new tax regimes. If you follow, you will be rules and regulations follow 100 there under the section 115 BC. Transport allowance will be in case of especially abled person. This is allowable only disability persons. For suppose I am a person is doing job, he is not a physically fit, he is physically handicapped. Not he cannot, he and she cannot go on the working place individually. Another person will be help you. Then will be allowance will be available. And number two, conveyance allowance received to meet the conveyance expenditure incurred as the part of the employment. It is right. Conveyance allowance is paid to the employer to their employees only if they are on company transportation facilities available. The maximum relief available under is rupee 1600 rupees or 9,200 per rupees per month. It is depends on the nature of business, and it depends on the situations and where you living, which types of conveyances allowances. And is number three is conveyance allowances. Any compensation received to meet the cost of travel and tour and transfers is conveyance allowances. Suppose if a person is doing job is a government sectors is and some private sectors, if a person is the transfer in one place to another place, they are providing to this convincing amount is whichever as per norms and whichever law actually pay whichever land. But in private sector, some companies is they are hiring the particularly knows that we are changing time to time is the transferable job. They will be providing to all amount is paid. This amount is a fully tax exempted. Okay. Conveyance allowance received to meet their conveyance expenditure incurred in the part of the employment. Any compensation received to meet the cost of travel and tour or transfer. Daily allowance received to meet the ordinary regular charges. Expenditure in your occur in account of absence from his regular place of the duty. And is daily allowance received to meet their ordinary regular charges or expenditure. This category of the allowances are exempted under Section 10, Clause 14 and Subclause 1. To extend the actual amount received, the amount spent for the performance of the duties in office, whichever is less, the following are the conditions. Here I'm discussing in the five conditions. First is traveling allowance. Whichever is the less will be followed. And here is any allowance granted to meet the cost of travel on tour on transfer of duty allowances granted to meet the cost of travel on transfer include any sum paid in the connection with the transfer, packaging and transportations for a personal effect of such transfer. Here will be which are actually paid and whichever is less. It may be if you pay the actually higher and the terms and condition is lower, it will be here whichever is less amount it will be considered here. And daily allowance as per section 10 clause 4, section 10 clause 14 and sub clause is 1, it will be implement here. And second point is daily allowance. In fourth point, daily allowance, any allowance whether granted on tour for the period of journey and the connections with the transfer to meet their ordinary daily charges incurred by an employee an account of absence from his normal place of duty. Here is any allowances whether granted on tour or for the period of journey in connection with transfer to meet their ordinary daily charges incurred by an employee on account on absence from his normal place of duty. It is depend on actual whichever is less. It will be considered here. And third point is conveyance allowance. Any allowance granted to meet the expenditure incurred on the conveyance in performance of duties of an office or employment of profit provide that free conveyance is not provided by the employer. It whichever is the less, it will be tax exempted. And helper allowance now is fourth point is a helper allowance is any allowance is whatever name called granted to meet the expenditure incurred is a helper is engaged the performance duties of an office and employment of the profit. It will be providing to helper allowance. Suppose I'm giving two examples. If you are a hire a person and you are providing to peon and a sub assistant person providing, it will be providing to helper allowances maybe whichever is less you are to pay. And academic allowance, suppose I am belong to teaching and university job, then this it will be allowance for professor and teachers is the allowances. Any allowance by whether name called is granted by increasing academic research and training pursuits in educational and research institutions. If you are doing a job in the research institutions and educations and if you are go to the academic allowances. And last point is uniform allowance. It will be implement only police and paramilitary army allowances. And if you are doing job in the NCC, this is uniform allowances may be allowed. Any allowance by whatever name called is granted to meet their expenditure incurred in the purchase of maintenance of uniform wear during the performance of duties and office and employment of the profit. It depends on the uniform allowances in the manufacturing unit. It will be provided you if you are they are providing to facilities. Now is it will very important point is a perquisite of the purpose. Now I will be discussed here perquisite is defined of the privileged gain or profit identical to regular salary. Perquisites are both taxable and exempted. Perquisites can be simple as a company car, fuel, reimbursement, etc. This include in will be perquisite in the salary and or maybe include interest-free loan if we are to providing and if a company providing to medical facilities, credit cards, accommodation sponsored and by the company and the taxable perquisite includes it is the both last is the tax exempted but is the category of the taxable income: supply of water, electricity and gas, rent-free accommodations, and professional tax, salary, domestic help had by the employee medical expenditures, and etc. And section 10, subclause 10C, 6 point is exemption is the voluntary retirement. Section 10, clause 10C, gratuity. Section 10, clause 10. Then leave enhancement in the section 10 in the subsection 10A. Uh, all points is the importance for the purpose of the tax planning. Section 10, clause 10C. The Income Tax Act exempt up to 5 lakh rupees in VRS compensation from income tax. You must file within the same tax year. Your compensation payment employees might your profit in rehabilitation, tax planning, and counseling. Another your service if you are doing any welfare. Suppose in army sectors and air force and navy and police, if you are giving to voluntary retirements and you are taking another sector jobs, it will be in terms of condition you can take the benefits on the 5 lakh rupees. And point here the 7 is interest on home loan is the sorry 7 point is regarding to section 24. Section 24 of the Income Tax Act 1961 considers and the interest that one pays of the priority of the home loan. This selection falls under the head of deduction from income from house property income tax act. We can say in another way, Section 24 of the Income Tax Act allow you to claim exemption on your home loan interest payment. They are two components in any house. It is interest and it is the principals. It will be you can take individually benefits for principal amounts is different, and if you are paying to interest, it will be in another place. You can take tax rebates. And section is up to gift to regarding point number 8, 50,000 rupees. If he receiving any gift to your spouse, wife, and your blood relations, and your siblings, and your close relative in like is your in-laws, there is no tax liabilities if till 50,000. If you are getting the more than 50,000, you will be so in the income point in this one, and that you will be so as income. Now we will be discussing here 9 point is regarding of his employer contribution and NPS, National Pension Schemes, and Atal Pension Yojana. I have already discussed section 80CCD, the regarding of the pension, Atal Pension Yojana. This section deals with the employer's contribution towards an employee's is NPS funds. Employees can claim this amount as deduction under section 80CCD, clause 2. The amount of deduction is limited 10% of salary and the DNS allowances for the private sector employees, while the amount is 14% of the government employees. Is in private sector is 10%, while the amount is it will be changed in the government sector, it will be 14%. The deduction available under section 80JJA is 30% of additional. 30% of additional employees cost is incurred or to be a business to business total employee cost in structure fiscal year in the previous fiscal years. And is 11 point is 223 year, and 223 and 24 it will be discussed here budget. You're eligible to tax exemption for new framework of the following under new tax regime with effect 2023 for budget introduced. It will be standard deduction is only 50,000 here is budgeted. It will be under section 57 clause second A. We have discussed the all is 2 points here is the regarding of your 12 point we have already discussed in the regarding of under section 115 BC as per new tax regime policy. Here in section is a 80C deduction not allowed in new tax regimes. But in old tax regime, section 80C to 80 section limitation is allowed. Now, I will be discussing here. Here is TDS rates of chart of the financial year 2023 4 year 23-24 years. It is the financial year. In section 192, you will be so is the salary. The TDS rates is as per applicable rates and basic exemption limits. And 194 payment due to subcontractor and contractor single transaction is 30,000 and aggregate transaction is 1 lakh rupees. It will be Hindu individual family is 1% and other is 2%. And rent is 194 AB plant and machinery 2,40,000 to 2% and 1,44,000 first B is the 10%. Payment on transfer improvable property except of his agricultural land is 5 lakh 50 lakh rupees is the 1%. Rent paid by the HUF individual who is not required to conduct of the tax audit, it is 50,000 rupees per month is only 5% is fees of the paid is 30% but 2% which is less. At TDS rate is technical service, royalty in the constructions and fees paid by the professional services. Just I am talking over here section 192, 194 to N. Here is the discussing here by TDS payment due dates. Now, first we will discuss here the structure of the TDS and what is the percentage of TDS. Now, here we will be discuss how many TDS will be you collect and for the our sites and UV can pay for the TDS department. Now is quarter ending is the June and September, December and March and the 31st April in month May, 1st June, 31st, 23rd May, 23rd April, 23rd May, 23rd June, and 23rd July and 23rd August, 23rd September. Every month is 23rd. In the quarterly June, September, December, and March, all is it will be complete. Here is and you will be pay for the deadline for the every month is the 7th date of everyone. 7th, suppose is April, 23rd April, the last date is the 7 May, and May to 7 June, and June to 7 July, and July to 7. Like etc. If you are paying to 24 March in 2025, it will be implemented for the helpful for the 17 April 2025. Now we will be check again your knowledge. Will be here is it is true and false. And for Income Tax Act 1961, reason false is reasons individuals and HUF are assessed indifferently. It is true or false? It is true. For taxation reason and individual income is combined with that of other minor child. It is true. And question number third, under section 80G of the Income Tax Act 1961 Act, individual are predetermined to deduct gift they make to charities. It is tax exempted. No, it is. I think it is true. Yeah. It is true. Yes. It is true. The portion of a partnership firm's incomes that an individual receives is taxed as under the part of their overall incomes. It is the tax exempted. And here is we will discuss in the two practical problems. Okay, now we will be start again the is your